This is Amanda from Macquarie Warrens Malaysia. Thank you for joining us today for another chat with Daryl Guppy on the latest moves in the Hang Seng Index and certain Hong Kong listed shares. Hi Daryl, in the last episode we discussed your view on the Hang Seng Index where you cited 18,000 as a support level and 22,000 as a resistance level. The HSI was hovering close to the 20,000 level at the time but has since made a new 2023 low with the June futures at 18,130 on the first day of June before rebounding 1,000 points off of that. Do you have an updated view on what investors should look out for in the HSI?
In this episode, we're going to look at the Hong Kong index, the Hang Seng, and then look at how that helps to identify the ways that we should be trading some individual stocks. Every analysis of the market and a trading opportunity starts with analysis of the index. The most important features on the Hang Seng are the support and resistance levels. Support at 18,000, resistance at 22,700. The breakout from the downtrend line did not develop into a long-term uptrend. It encountered resistance at 22,700 and has come back to retest support at 18,000. We anticipate that we are likely to see continued trading sideways within this trading band. That determines the strategy that is appropriate for the stocks that we look at. We do not need to make this more complicated than it needs to be.
Thanks, Daryl. With the HSI continuing to move sideways for the time being, investors may consider the call and put warrants over the HSI to gain leveraged exposure to any upward or downward movements in the index. As mentioned in the last episode, investors can refer to the warrant search page to find out which warrants are our current focus warrants. One thing that investors should know is that an issuer can be sold out of a warrant, meaning it no longer has any inventory left to sell. This can cause the warrant price to be inflated by other cues in the market. Hence, one thing to note is to ensure that warrant into consideration is not on the sold out list on our homepage and to check its live matrix before trading. Daryl, do you have any observation on any of the Hong Kong listed shares, whether they have similar or different patterns from the HSI during this period?
The Hang Seng is defined by support and resistance, by trading bands, and we can see the same behaviour repeated in individual stocks. BYD is an example of a pullback to an established trend that provides an entry point at a point of temporary weakness in the trend. So what we're looking for in this type of situation is uptrend continuation. Now that wasn't too difficult, was it? The trend was clear. The opportunity is clear. You need to drill down to the detail of how you might time your entry or your exit, but the strategy is clear. And the same applies when we start looking at trend patterns of behaviour. No need to go searching. The pattern should be clear and evident. And with Geely, what we see is the beginnings of the development of a fan trend reversal. So we see this downtrend line here, the breakout, the establishment of a new downtrend line, a breakout above that line. Key factor in the fan trend, and this is not a Fibonacci fan, the key factor in the fan trend is that it comes off a double bottom support level. Fan trends typically have between 3 and 5 downtrend lines in the pattern. So what we're looking for here is another weak rally, a retreat, so we can plot the third trend line, and then the breakout from that provides the entry opportunity. Ping An has a well-defined support level through here. What we're looking for is a test and a rebound rally to develop from the current test of that support level. It's not easy to decide how far the rally will go. There's no obvious resistance levels on this particular chart. So that sort of trade becomes a momentum trade. However, failure of the support level to hold gives us a downside target in this support band through here. So the key factor here, a continued rally has no upside target, so we've managed as a momentum trade, but a fall below the support level has a downside target set by this lower support band. That was a little more complicated, but sometimes the situation is just so obvious that it requires no more than half a second or less to be able to decide what the appropriate trading strategy is. JD.com leaves no doubt. This is a solid, well-established downtrend. It has significant resistance sitting at this level here. The long-term group of moving averages is well separated, telling us that investors sell every time there's a rally. They sell into the rally to realise profits or to limit losses that are beginning to develop. So this rally is most likely to continue to move down. A clear downtrend, a clear trading strategy. Trading short with JD.com is an appropriate and obvious strategy, but sometimes the downtrends are a little bit harder to establish. NEO combines both a strong support and resistance level and a fairly consistent downtrend. Now, the downtrend is not as strong as it was in JD.com. Notice that the long-term group of averages is not as widely separated. Price does break above them and then retreat, breaks above and then retreats. Key factor here is that, yes, we may see a rally that breaks above the long-term group of moving averages, but it's limited by this strong resistance level that's been in place historically. So the situation with NEO is different from the strong, pronounced downtrend with JD.com. Hong Kong Exchange is trading between a support and resistance trading band. That means that the rally that's taking place at the moment is likely to be limited by this strong resistance level and a return to a retest of support. The most likely outcome is trading between the trading band, between support and resistance, rather than a continuation of the trend with a strong drop below the support level, or a reversal of the trend with a strong move above the resistance level.
Thanks, Daryl. Pausing here to show the current focus warrants for the Hong Kong stocks you've discussed, and also for other well-known names such as Alibaba, Tencent, Meituan, and Xiaomi. For instance, investors may consider the call warrants for potential upward movements per your analysis of BYD and Geely, and may consider the put warrants for potential downward movements, such as in JD.com, as well as in the case of a break in Ping An's support level. Investors can also use the Heatmap Pentagon alert on our homepage for trading ideas. For example, the alert currently shows that a green pentagon has recently appeared for Meituan. Selecting this underline brings you to the warrant heat map, where you can easily view the technical charts as well as the associated Macquarie warrants. Daryl, any other advice to investors on how to look out for trading opportunities in the current market?
It doesn't matter what methods you use to select your stock pool. At some point, before you make your final selection, you will need to visually assess every chart. In this case, we've done half a dozen. But it doesn't have to be a long and involved process. The trading opportunity should be clear. If it doesn't leap out of the chart at you, then ignore it and go for opportunities that are much clearer. But one final comment, one final important point about trading in the current Hang Seng environment. It's your choice as to what you decide to trade. But the market behaviour suggests we should not try to defy the trend. It's going to take more than your money to stop these strong trend behaviours in the Hang Seng. I wish you every success in your trading.
Thanks, Daryl, for the chat, and to everyone listening in. As always, do subscribe to our newsletter and follow our Facebook and Telegram channels via the links in this video's description to be notified of our next episode. See you next time.